Blockchain Alliance's latest crypto roundup for June 30th, 2023. Ron Quaranta here with my co-host, the one, the only, David Brill. David, like the old saying says, the days are long, but the years are short. We're galloping into Q3 already. Lots of news to cover. I know you and I have spent quite a bit of time over the past week looking at the latest news and headlines, the biggest of which were the Bitcoin spot ETFs being filed. I think it was BlackRock first. Then we saw Valkyrie and Wisdom Tree and Fidelity, on and on and on. And sometime earlier today, a public statement on the cusp of a, I guess, long weekend in the States and in Canada that, hey, these aren't sufficient, although that's not specifically a ruling one way or the other. What are your thoughts, buddy, about these ETFs kind of coming to the fore now and the SEC saying, no, doesn't work?
Well, first of all, happy to be here from New York this time, and I'm not surprised. Look, I worked on one of the first Bitcoin ETF filings in 2016, and there's a lot of back and forth. I think the timing is clever because it makes it a talking point into the weekend. The markets definitely did not appreciate it if you're like a long-only person at all, and they've taken a hit from it. But I think ultimately, reading a couple of the articles, it looks like they're asking for naming which exchanges are the ones that are going to be used in the filings. Some of them didn't refer to the exchange, others did, and also getting into more specifics on the surveillance sharing and what that actually entails. So I don't think that's necessarily a negative. I think that this is well-played gamesmanship and a chance to sort of shake the markets a little bit going into a long weekend.
David, I want to interject real quickly. As usual, I forgot the usual WSBA disclaimer. Obviously, for everyone listening, nothing discussed is an accounting, investment, legal, or tax advice. David, on the ETF filings, this is my ignorance speaking, but for a non-crypto ETF filing, would they necessarily have to immediately note the exchanges that they're sourcing data from? Do you know?
I mean, I think it varies. I think clearly the SEC wants to know. And this may all play into the litigation with Coinbase. And maybe they're going to take a view that if you're using Coinbase as the exchange to support your ETF, and we have these issues with Coinbase, we may not look favorably upon that.
Mm-hmm.
I mean, I hope that's not the case, but that would be some 4D chess if that became an issue in this process.
And you could make the logical extension to that because Coinbase in the BlackRock filing, Coinbase custody is the designated custodian for the filing. I wonder if that plays into this kind of 4D chess that the SEC is doing as well. But that said, there's no shortage of data available in the crypto space. You could argue CME or NASDAQ puts forward specific types of data, correct?
Yeah. Again, a lot of it is if you're going to have surveillance with an exchange, the question is going to be, well, what kind of data is the exchange providing you, and is that data sufficient? I'm not surprised these questions are coming up. I would have thought it would have just come as part of more of a holistic process of reviewing the applications, but I think the powers that be decided it was worth putting this out there right now and raising this issue. And maybe they didn't like the fact that there was, starting to gain momentum, that people felt like this was going to happen.
Yeah.
And I think that's why a bunch of us have said it's sort of 50-50 right now.
Yeah.
You don't know what other issues are going to get unearthed in the process.
Yeah.
But I'm still bullish on this happening. I just think that there's a normal comment process back and forth, and I think this is just the timing of it is a little interesting, I would say.
It is certainly a bit of political chess. As you mentioned earlier, David, markets responding. It looks like the Bitcoin on the week down over 3.5%, almost 3.75%. A good chunk of that in the past 24 hours or so. When we look at these kind of filings, the question that comes to my mind is what changed in the narrative that made a BlackRock not immediately, let's rephrase that. It was a pretty substantive submission, all things considered. But what was the catalyst for them to do it now? And does this play, for me, does this play into the TradFi is coming from crypto, or, the different iterations of articles we see that note that? Why now?
Well, as you know, it takes a while to draft these documents. So when people say, why now? This, this filing was in the works for months. I think why now? It feels like with Bitcoin's status as a commodity confirmed by all parties, it feels like there's a desire for it in the marketplace, and maybe perhaps they've also read the tea leaves and feel that Grayscale has a good chance of winning their litigation with the SEC. And so if that is the case, well, why not get in there with their own filing and make sure that they're in line when Bitcoin ETFs get approved? So I think that could be something also, because from my reading of the testimony or from the hearing, the judges had a very difficult time finding the SEC's argument in the Grayscale case really, legally credible, and they punched a lot of holes in it. So I think maybe they were thinking about it. There's customer demand. The Grayscale case seems to be going in Grayscale's favor, and you can see that by the reduction in the not the premium, but there was a discount
Sure.
that GBTC's been trading to the market with, and that's starting to get reduced.
Yeah.
So I think demand, Grayscale making positive arguments in court, and timing. They feel like time, and they went ahead.
David, thanks. For the audience, please do certainly submit your comments. Thank you for joining us, and shout out quickly to our fellow co-host, David Joshua Ashley Clayman, who I suspect is traveling through Europe, probably on the Gulf Stream. I'm not quite sure yet, but we'll see her. We'll see her next week as well. David, that really brings us to something that I've been focusing on quite a bit. I am going a little off script here, but a lot of what you and I have been alluding to in previous meetings was we see these enforcement actions. And in the aggregate, you could argue that when they hit judicial proceedings, I'm thinking the Voyager case and Judge Wiles' well-worded commentary, when we see some of the stuff, when we talk about Ripple or when we talk about Grayscale, for example, from a judicial perspective, the courts seem to be weighing in against some of the things that the SEC is claiming. And I know I'm overstating that being a non-attorney. Would you agree with that? Will the judiciary, will the courts save crypto?
The way I view it is the courts really are going to decide some of these issues for crypto on the merits. And right now, we've typically heard the mantra that everything besides Bitcoin is security in the eyes of Chair Gensler, but the courts will force you to prove that case and make that case. So Judge Wiles in the Voyager case, claims were made by the commission. The judge said, show me the evidence. There's no record you put in front of me. And that's just not going to fly in these hearings, whether it be Coinbase's lawsuit that they're defending, whether it be other bankruptcy cases that they're defending. So they're really not going to accept no facts and make a determination on that. And I don't think they're going to accept a presumption that just because the commission says something that minus facts that it's accurate. So I think the judiciary is really going to be that third pillar of government where they're going to be an arbiter of facts and the law issues.
Yeah. We just got a good morning, I think, from LinkedIn user. Hello, LinkedIn user. But again, any questions for David or I, please put them forward. David, on that case, one of the things you raised that's interesting on the judicial perspectives in the courts, the SEC had put forward to them, and correct me if I'm wrong, this anticipatory sense of, well, these may be securities, hence don't do X. Is that what we're talking about a little bit?
I mean, yes. Look, it's really unusual to come out and say that, X token or Y token is a security without having brought an action against that token holder in the first place. Now, a lot of us might say a lot of these are decentralized, and I'm not sure who you would, bring these actions against. But, putting decentralization away for a moment, you're basically naming 12 or 13 tokens in the Coinbase suit. And I believe 6 of those were listed by Coinbase when they went public. So the commission had an opportunity to say, have an issue or pose an issue with one of those tokens, and they didn't before Coinbase's registration went effective. So really, in a big complaint, to spend a few paragraphs, making a few, putting a few facts in, and then saying these tokens are securities, it's really not, it may not violate due process, but it really violates the spirit of due process for these, token projects. And it really taints them in a way, because it then forces either brokers or crypto exchanges in the US to make a decision. Do we want to run the risk of listing a token that the SEC in a complaint has said may be a security or they think is a security, but has not proved that it is a security, in a court of law?
Yeah. And David, sticking with Coinbase, and again, we all know of Coinbase. I haven't met the team there directly, but certainly know about some of the work that they're doing, and they've been pretty firm in their perspective that they will fight what the SEC's put forward from an enforcement action perspective, and they've got a deep bench of legal expertise to do that. One of the things that happened this week, and I'd love your perspective on it, was their motion to dismiss, which I have to confess I haven't had the opportunity to give a full perspective and read to, but what's going on with this motion to dismiss in your perspective?
So it's really interesting. And candidly, I've been traveling and I've had some meetings, so I've really given it like a first good read, but I would want to read it maybe 2 or 3 times to sort of let everything sink in. But there are a couple of things that I would point out that I think are really interesting. One is that usually you have 60 days to respond. Not usually, you have 60 days to respond to a complaint. And Coinbase took less time than that. And they also filed it right before a holiday weekend. So I think this is a little more of that 4D chess we're talking about here. So I think some of the commission's lawyers will be spending some of their weekend looking at this answer. And so that was a little tactical. But what was really interesting to me is that they sought a motion to dismiss, but not one based on sort of the merits of the case. And what I mean by that is a typical motion to dismiss would be like a 12B motion. It would be a motion to dismiss, and and in that case, the judge would have to assume all the facts put in evidence by the SEC, and based on all those facts, would determine whether there was grounds to dismiss the complaint. With the SEC, what Coinbase did was filed for a motion 12C for a motion for judgment on the pleadings. And what they basically did, and we could spend 2 hours on this, but they basically modified, put a lot into exhibits of the public statements made by Chair Gensler, other SEC officials, and other information like the writ of mandamus that they filed. So they put those as exhibits to this motion, and they've really gotten an opportunity to give their narrative to the judge. And what they say to the judge is that based on the pleadings, the SEC doesn't have a case. And so they do it on a few grounds, and one of them is their view is that these tokens are not securities. Because they're not securities, they don't fall under the purview of the SEC, and therefore the SEC can't bring this cause of action. Now, this is something that a lot of us in the legal world talk about, but it's sort of the kind of thing that when you get a questionnaire or you get a subpoena from the SEC, a lot of companies have been circumspect about saying, well, we don't think these are securities in your jurisdiction. But here Coinbase has gone ahead and said the quiet part out loud, we'll say, and has put that in their 12C motion. Another thing that they are saying is they're using that major questions doctrine. And that's basically, it prevents administrative agencies from using ambiguous statutory authority to make rules on issues which should be left to Congress. And what's interesting here is that there's been a lot of, discussions about different bills in Congress. There's the McHenry bill. There's several other bills in Congress looking to create rules for crypto. And what Coinbase is basically saying is, by allowing the SEC to bring this claim, you are really usurping the authority of the legislature, and you're really getting ahead of what the congressional intent is. And so since there are a few digital asset bills in Congress right now, one could extrapolate that the congressional intent is to legislate on this matter.
David, to interject there a little bit, there are a couple of things that I think are important there. When we talk about the major questions doctrine, that's not a short-term thing. That's the type of stuff that ends up at the Supreme Court, right?
I mean, look, it's certainly possible. It just did there was a case in the EPA where that went to the Supreme Court on the major questions doctrine. So yes, it's something that certainly could go up the chain. But I
Yeah.
think for Coinbase, I think they've picked the arguments that most benefit them to fight first. And they're sort of, by taking this approach, they're reframing the case and then focusing on the arguments that they want to make. And in the manner that they've done it, it's really allowed them to get the information and documentation, whether it be the speeches or other exhibits, in front of the judge in a very skillful way that they wouldn't typically be able to do at this stage.
It is skillful, David. I think the question that comes to my mind, and this is another non-lawyer question, is do they have to prove that all of those tokens are securities, or does the SEC just need to prove that one of those tokens is a security? And that's a question that a lot of us have in the industry.
Well, I think in the first instance, relying on the fact that they had 6 of the tokens listed at the time that they went public and their registration statement was approved, the SEC, Coinbase will argue, look, if the commission had an issue with these tokens, they should have said something while we're going through the registration process, not 2+ years later. So I think it kind of cuts both ways. It's sort of like, if you thought these were securities, why didn't you say something 2+ years ago? Why did you wait this long? And it plays into their argument that the law isn't being applied, not conditionally, but consistently. The law's not being applied consistently. And by not applying it consistently, they're kind of proving the negative. Because some people will argue that just because the SEC didn't contest the tokens prior to Coinbase going public doesn't mean that they lost the right to do it. But it does mean, in Coinbase's view, and they'll argue that, look, the law isn't consistent here. If the SEC had an issue with these tokens, we should have been told about it before we went public. And now, after the fact, you're telling us you don't think they're security. You don't think think they're securities.
Obviously, to that point, David, Chair Gensler, again, who I don't know and have never met. I think I passed him in the hallway once. But that being said, there's this kind of growing call. Certainly, some folks in Congress, there are other organizations that are saying he should step aside. I just, again, playing a little bit of devil's advocate, that's not a likelihood at all, at least in this current administration, correct?
I don't think so. But I think the Blockchain Association in their piece made some good arguments. Sure. I think it's really fundamentally, how do you view regulation? Like, do we view it as creating the boundaries for companies to conduct business here, whether it be securities or securities-related products? Or are we looking to sort of blunt, building businesses and blunt new organizations and blunt, new means of doing business? And so I think a lot of it depends on what your view of the state is and the role of government and regulation.
There's almost a philosophic kind of argument to some of this, but I think the overarching for a lot of it, and I hesitate to say the word, but this is not just a legal regulatory conversation. It is a political conversation. Yes. And I think we need to be clear and understand that political conversations tend to be ugly until they're resolved. And we need to see where that goes.
Well, it's really interesting because it's become political. And it's interesting because a lot of people would have thought that the Democrats would embrace crypto, embrace the accessibility, embrace some of the issues that traditional banking has had and push back on those by making, for instance, if you're going to offer products on the blockchain, there's no redlining on the blockchain. If there's a protocol that's going to lend against one ETH, it's going to lend against one ETH whether, no matter whose address it is. So, I guess besides if it was like a sanction address. So there's really some sort of, I don't know if egalitarian is the right word, but it really applies to the masses. And there isn't this sort of potential discrimination that's existed in the past. So it's very interesting to me. And I think not wanting to, get on the political side of things, but I really can see this argument and this position hurting the Democrats in the election. And I also can see it being an issue that people really care about in individual congressional elections. And maybe it can be a swing issue for some representatives. Yeah. The last thing I'll say, Ron, is if I was a crypto company in a jurisdiction that had a Democratic congressperson or senator, I would really consider writing that, congressperson. If
Sure.
you're going to make donations for their elections, I would say, look, this is a meaningful issue for me, and talk to them about that. And I
Yeah.
think that is really part of representative government.
Yeah, and we've seen that, participatory democracy, is important. We've had those conversations. We're not lobbyists, David, as you know, but we've done
No.
our visit in DC, both with representatives and regulators. We'll do likewise again. I'm going to segue for a minute, David. My brain is still fixated on 4D chess, and I realized, do you remember, I think it was just before the Christmas holiday in 2022, and the SEC dropped some pretty comprehensive proposed rulemaking that ruined a lot of weekends for a lot of people. I suspect there's a bit of, we're going to ruin your Independence Day weekend here in the States, and drop some stuff for the commission to review. David, let's talk a little bit also. I mean, you've got deep experience, you and I both, in this space. And when we look at the world of bankruptcy that have happened in this space, one of the things that came up recently is BlockFi. And again, we don't have a relationship with BlockFi. They presented to the WSBA in the ancient past, but creditors now seeking liquidation. If I remember the article correctly, there's some pretty, I want to call them salacious perspectives or comments on some of the things that are happening. What are you seeing in the BlockFi creditor perspectives, and what are the thoughts on liquidation?
Look, bankruptcy itself it's a very difficult tool to use in the crypto space, because we're so used to moving value instantaneously. Bankruptcy, with its disclosure provisions and equity, it takes a long time. And I think in the BlockFi case, the creditors really have been tactical here. They saw that there isn't going to be another buyer for BlockFi, and instead of having the estate run month after month, they want to see BlockFi liquidated. And and in this case versus some of the other cases, it does make sense here. Why keep the entity running? Why keep it moving forward when you can liquidate it and really speed up the creditors getting their assets back?
Yeah.
And in particular here, there was this investigative report that was done that has been filed under seal, and it seems to be that the creditors believe that there's been widespread wrongdoing by the CEO of BlockFi and a lot of management of BlockFi. And I think when you look at the totality of the costs of being in bankruptcy, the time lag of being in bankruptcy, potential malfeasance by management in the bankruptcy, the creditors don't want to have to accept a plan where they are giving, management, an out, and they are giving management waivers of potential liability.
Yeah.
And I think that the creditors are not willing to go along with that in the BlockFi case.
As an aside, David, in a liquidation, generally, are they getting less a percentage? And clearly, I'm thinking to Voyager and the acquisitions that fell through for a variety of reasons that we know about, and then the ultimate liquidation that was essentially a little over a third. In general, do liquidations return to customers far, far less than in any other instance? For example, an acquisition.
Look, I can't talk about the Voyager bankruptcy, but in general, you have to remember there's a big cost to running an entity that's not operating. You have employee costs. You have, technological costs. You have professionals costs. And if there's no buyer for BlockFi, then, I understand where the creditors are coming from. Why extend this out?
Yeah.
Why negotiate, a plan and go back and forth when you could liquidate, have a trustee come in and liquidate and get assets back to creditors as soon as possible?
Yeah.
I mean, I think what people forget is that, this value to creditors is important. I don't believe that everyone put their life savings in these different platforms. I've always been really skeptical of that. But, people have a right to access their value. And if liquidation is the quickest way to do that, especially when there isn't a buyer, then it seems as an outsider that it makes perfect sense to do that.
Yeah, I think you and I are of like mind there, David. We've had this conversation, and not everyone in the crypto space, and to paraphrase President Biden, and again, not to make this a political conversation, but not everyone is a wealthy crypto trader trying to evade taxes. These are some people who simply want their value back, and they should, in a regular world, they'd be entitled to that value back. David, one of the interesting things, I'm definitely tearing up the script here a bit, as you know, I tend to do. It's been at least a couple of broadcasts since I've said the three letters FTX. FTX made it back in the news recently on a couple of different fronts. One particularly interesting were accusations, and to the extent we're comfortable talking about it or not, let me know. Accusations that an attorney at FTX actively worked with Sam Bankman-Fried and other management to essentially help them move money illicitly, or at least take control of customer funds illicitly. I haven't read the details of it. Again, I've been using this word a lot this past week, salacious and pretty inflammatory, I would imagine. Have you seen this, and what are your thoughts about this and the potential relaunch of FTX International?
So I'm not going to take a position on those claims against another lawyer.
Sure.
I think when it comes to calling out lawyers, I'd want to see the evidence firsthand. And, look, I think they're important, and I think there are things we need to learn more about. But I'm sort of circumspect about kind of going down that road until there's more information out there.
I agree with you, David. That said, though, I feel like attorneys in the crypto space, and our legal working group has 200 attorneys from a bunch of different firms and GCs within enterprise. These are folks with deep experience like yourself. Lawyers are an easy target in the crypto space for reasons I don't understand. I feel like a lot of the legal profession gets lumped into this. You must be doing something bad equals crypto, and it just doesn't seem to be a fair hearing in my mind.
No, it isn't. And I think there's a view that if you push back on a regulator, or you push back on a perspective of a regulator, that you're somehow fostering maybe illicit behavior. And it's not the case, and I think that there are a lot of really smart, educated, well thoughtful lawyers who are in this space. People have been practicing 10, 20 plus years, have worked at regulatory agencies, worked at Fortune 100 companies, worked at different, maybe a traditional exchange.
Yeah.
So I really push back on that notion, considerably, because, I can think of people who are part of our committee at WSBA. I can think of, some of my law firm peers who are now GCs of big crypto companies. And these are thoughtful, well-educated practitioners who've really spent a lot of time on this. So I really push back on that notion. I think it's a little bit lazy, honestly.
I agree with you, David. Some part of me wants to do a shout out to all of our legal working group members, and then I realize we'd be here for well over a couple of hours because it's 200 of them. But shout out to all of you, or you are all consummate professionals. And again, in the backdrop of all of this, David, we've only got a few minutes left. You and I have these conversations on a regular basis as well. We see, and I use the phrase over and over, but builders still building. We're seeing tokenization implementations. We're seeing leveraging of blockchain. So one of the things I always try to put forward on episodes and broadcasts like this and in our other meetings is the crypto conversation, and it is our crypto roundup, but there's more to it than that. And I think it's important. We've seen the news from overseas around digital payments and CBDCs, that the world's evolving. And I think a lot of what we're talking about feeds into that evolution and that conversation. David, just with a couple of minutes, we've got the holiday weekend-ish. I think Monday's not a holiday, but I suspect no one will be working. Plus, Happy Canada Day coming up to our friends north of the border. What are you looking at in the coming week or so? What are you going to be focused on in the news cycle?
Well, one thing is price. Typically on these holiday weekends, when there's low volume, there's a lot of movement. There's a lot of volatility, and especially if there's low liquidity. So as a lot of people know, there's a lot of leverage in the market, sometimes bullish leverage, sometimes short leverage. So I'll be curious to see if there's some big moves this weekend. I think also really curious to read more and hear more about what Coinbase's answer to the SEC. Read more about what BlockFi's done here, because I'm really impressed by this very tactical approach that they're taking, and it's very interesting, and very curious to see what the reply papers are to this motion, because obviously there's another side to the argument, and I'm really curious to see how that plays out. I think I'm curious to see price a little bit, and also is there more to come out? Are there any more complaints to come out, or anything from the legislature next week?
Yeah,
I'll be watching. Ron? What are you thinking about?
Yeah, I'll be watching price too. I've been fascinated by, and I won't name the issue But the leveraged Bitcoin fund that's out there, again, none of this is accounting, investment, legal, or tax advice. It's just been interesting watching the price action of that leveraged fund against the overall market and seeing the swings in price, particularly since it's pardon me, its launch. The other thing I'll be focusing on, David, and for the audience out there, next Wednesday, David, as you probably know, we are having our first public broadcast at 1 p.m. On understanding the Wall Street Blockchain Alliance crypto industry principles. That's an open public forum, WSBA members or not, and it really is a come to the table. Let's define the organizing principles of what we're trying to accomplish in the crypto space, and that's folks along different professional verticals, banks, lawyers, traders, technology, on and on and on. So again, open invitation to anyone who's watching. Check out our website or check out the registration page on our LinkedIn Live page as well. So that's going to eat up a lot of time because that's really, David, from my perspective, meant to collate the voice and perspective of industry. And that's going to feed a lot into helping to define the legitimacy of the industry and the fact that participants in this industry are trying to do things the right way. It's just really hard sometimes to understand what the right way is. Aside from that, I'm going to go ahead. I'm sorry, David.
No, I was just going to agree with you, Ron.
Yeah, and aside from that, I'll be pouring myself a beverage of choice over the weekend, and much to my wife's chagrin, probably reading multiple ETF filings for juicy nuggets of information. We'll see how that goes. David, if I have to crash at your place, you will know it went bad. Closing comments?
Well, I'll be back. I'll be back in Florida after the weekend, so it's yours. I would say also, Ron, like we should make sure people know where to find the video of our LinkedIn Live today, and make sure we share that on our LinkedIn so people can see this in case they couldn't make it. I get it's a holiday weekend and it's a getaway day for a lot of people, and I absolutely will be attending on Wednesday. Looking forward to that as well.
Absolutely. Good point, David. So LinkedIn Live, the recordings are always available in the WSBA Wall Street Blockchain Alliance LinkedIn stream for future viewing. We also always publish these on the WSBA's YouTube channel. So in 2 or 3 days, that will be available. The link will be shared both through social media and the newsletter as well. Good point, David. We're still working on some technical difficulties, but we're hoping to do YouTube streaming soon, and we will figure it out. Hoping to have some guests for next week as well. But David, safe travels. I know you got a busy weekend ahead of you. For everyone who joined, thank you. If you didn't get a chance to ask questions, drop us a note. info@wsba.co. David, as always, thank you again, my friend. We'll chat again next week.
Thank you. I wish everybody a happy Independence Day.
Happy Independence Day. Happy Canada Day, Canadians. Thank you.
Take care, everyone.